Trump did not like being asked about taco trading.
We have the hottest country in the world right now. When you ask a nasty question like that.
Some investors using a new phrase to describe Trump's on-again, off-again tariff threats.
Taco, T-A-C-O, Trump always chickens out. So it's basically betting that when Trump does something silly on Friday, he will have undone it by next Tuesday.
Trump has repeatedly announced major tariffs, only to pause and either reduce the rate or back down altogether, sparking major sell-offs at the time of the threat and significant recoveries once Trump changes course.
Donald Trump's attorney, Evan Corcoran, arrived at a Washington, D.C. courthouse. You can see him there to testify to a grand jury without the protection of attorney-client privilege. Corcoran must also hand over documents and notes related to his legal work with the former president. This is all about the Mar-a-Lago classified documents investigation. CNN's Caitlin Polantz live outside the courthouse in Washington, D.C. Evan Corcoran is inside. Caitlin, so what's happening?
Indeed, Evan Corcoran is inside the courthouse, and we do believe he's back with the grand jury at this point, a little bit after 9. His attorney is here as well, so it is quite clear.
All right, buckle up, because President Trump just got absolutely hammered by Wall Street in a way that nobody saw coming. We're talking about a massive financial disaster that's wiping out trillions in market value, causing panic selling across global markets, and triggering the biggest revolt from financial institutions since ever when it comes to a sitting president's policies. Trump rolled out his signature tariff strategy, thinking he was going to reshape global trade and make America stronger. Instead, he's watching the stock market crater, major banks betting against his policies, and investor confidence collapsing in real time. This is not some minor policy disagreement. This is Wall Street essentially saying, we don't believe in what you're doing, we think it's going to fail, and we're putting our money where our mouth is by betting against you. And when Wall Street bets against a president's economic policies, that's a 5-alarm fire for any administration. But before we go any further, real quick, let's be honest. You can't really trust mainstream media anymore. That's why we built Pump Politics, to bring you real stories, real context, and no corporate spin. If you want to stay ahead of the headlines, join our free newsletter. We'll send the news straight to your inbox every day. Just click the link in the description to join. And if you just want to support what we're doing, join us, be part of the community that actually cares about the truth. All right, let's get back to the video.
As the federal government was trying to get back classified records at Mar-a-Lago. We learned last night from my colleague Sarah Murray and a source she was speaking with that what they want to ask him about is that response after May of last year, where the federal government sent a subpoena.
Here's what happened. Trump imposed sweeping new tariffs on dozens of trading partners through executive orders. We're talking steep tariffs, the kind that fundamentally changed the cost of doing business internationally. Trump's argument was that these tariffs would protect American industries, bring manufacturing jobs back, and force other countries to negotiate better trade deals. That's the theory. The reality has been an absolute catastrophe. The stock market plunged immediately. We're talking about the largest global market decline since the pandemic. The S&P 500 dropped over 10% in just days. Nearly $5 trillion in U.S. market value just evaporated. $5 trillion. That's not a typo. That's real wealth that disappeared from American portfolios, retirement accounts, and investment funds because investors looked at Trump's tariff policy and said this is going to destroy economic growth and corporate profits. But here's where it gets really wild. Wall Street didn't just panic and sell. They started actively betting against Trump's policies. Major banks and hedge funds are now buying up tariff refund claims. What does that mean? It means they're betting that the Supreme Court is going to declare Trump's tariffs illegal and force the government to refund all the tariff money that's been collected. So these financial institutions are essentially purchasing the right to collect those refunds from companies that paid the tariffs. They're paying pennies on the dollar now because there's no guarantee the Supreme Court will rule against Trump. The market chaos has been relentless. In April 2025, when Trump first rolled out these tariffs, markets went into free fall. Every major index tumbled. Investors started pulling money out of U.S. assets and moving it to safer havens in other countries. The panic was so severe that it triggered comparisons to 2008 financial crisis levels of fear and selling, and it hasn't really recovered since. Every time there's news about the tariffs, every time a court rules on their legality, every time Trump doubles down on the policy, markets react negatively. We saw this in September when a federal appeals court raised serious doubts about whether Trump even has the legal authority to impose these tariffs. The Dow Jones dropped 249 points in a single day. Nearly every market sector ended in the red. That's investors saying we don't trust this policy and we don't trust that it's going to survive legal challenges. Trump's administration has been scrambling to contain the damage. They've tried to reassure markets. They've tried to spin the tariffs as necessary short-term pain, for long-term gain. They've attacked critics and tried to blame market volatility on foreign manipulation or media hysteria, but none of it is working. Investor confidence keeps declining, asset prices keep falling, and the financial institutions that are supposed to be Trump's natural allies, the banks, the hedge funds, the major investors who typically support Republican economic policies, are openly betting against him. That's how bad this has gotten. Wall Street has basically declared no confidence in Trump's economic leadership. The political implications are staggering. Trump's entire political brand is built partly on being a successful businessman who knows how to create wealth and manage the economy. He ran in 2024 partly on economic messaging. He won partly because voters trusted him on financial issues. And now he's presiding over a market crash triggered by his own policies. His supporters can try to blame external factors all they want, but the timeline is clear. Trump imposed tariffs. Markets crashed. Wall Street revolted. That's not a coincidence or bad luck. That's cause and effect. And voters are watching their retirement accounts shrink and their economic security evaporate while Trump insists everything is going according to plan. That's a political disaster waiting to explode. So let's break down exactly what's happening with these tariffs, why Wall Street is betting against Trump, and what this means for the economy and Trump's political future. All right, let's dive into the details because this financial crisis has layers that most people aren't fully understanding. First, we need to talk about what these tariffs actually are and why Trump imposed them. Tariffs are essentially taxes on imported goods. When a company imports products from another country, they have to pay a tariff, a percentage of the value of those goods, to the U.S. government. The idea behind tariffs is that they make imported goods more expensive, which theoretically makes American-made goods more competitive and encourages companies to manufacture domestically. That's the economic theory. Trump has been a tariff enthusiast for decades. He believes that America has been taken advantage of in trade deals and that imposing tariffs will force other countries to negotiate better terms and bring manufacturing jobs back to the United States. So in April 2025, Trump rolled out sweeping new tariffs through executive orders. He imposed steep tariffs on goods from China, the European Union, Mexico, Canada, and dozens of other trading partners. We're talking 20, 30, sometimes 40% tariffs on various categories of goods. These weren't targeted surgical tariffs on specific industries. These were broad tariffs affecting hundreds of billions of dollars worth of trade. Trump framed it as America finally standing up for itself and refusing to be exploited by unfair trade practices. His supporters cheered. They saw it as Trump delivering on his promises to protect American workers and industries. But economists and market analysts immediately started sounding alarm bells. They warned that these tariffs would trigger retaliatory tariffs from other countries, increase consumer prices, disrupt supply chains, and ultimately harm American businesses and workers more than help them. And guess what? The economists were right. The market reaction was swift and brutal. Within days of the tariff announcements, stock markets around the world started plunging. The S&P 500, which represents the 500 largest publicly traded American companies, dropped over 10% in just a few days. That's a massive decline. To put it in perspective, nearly $5 trillion in market value disappeared. $5 trillion. That's wealth that existed on paper, in stock portfolios, and retirement accounts that just vanished because investors looked at Trump's tariff policy and concluded it was going to hurt corporate profits and economic growth. When investors lose confidence that quickly and that dramatically, it creates a self-fulfilling cycle. Stock prices fall, that makes people panic and sell more, which causes prices to fall further, which causes more panic. It's a downward spiral that's incredibly hard to stop once it starts. But the stock market crash is only part of the story. The really fascinating and disturbing part is what Wall Street started doing in response. Instead of just accepting the losses and hoping Trump's policies eventually work out, major financial institutions started actively betting against the tariffs. They started buying up tariff refund claims from companies that had paid the tariffs. Here's how this works. When a company imports goods and pays tariffs, they have a potential claim for a refund if those tariffs are later ruled illegal or unconstitutional. Normally, those refund claims aren't worth much because the odds of getting your tariff money back are pretty low. But Wall Street banks and hedge funds are now buying those claims from companies at a discount, maybe 20 or 30 cents on the dollar. The companies get some immediate cash, and the banks take on the risk that the tariffs might be upheld. But if the Supreme Court or other courts rule that Trump's tariffs were imposed illegally, if they order the government to refund all the tariff money, then those banks and hedge funds make massive profits. This is essentially Wall Street betting that Trump is going to lose in court. They're positioning themselves to profit from Trump's tariffs being struck down as illegal. Think about how extraordinary that is. These are the same financial institutions that typically support pro-business Republican policies. These are the banks and investment firms that usually want lower regulations, lower taxes, and pro-growth policies from Republican administrations. And they're so skeptical of Trump's tariff strategy that they're literally betting millions, probably billions of dollars that it will fail and be ruled illegal. That's not just a lack of confidence, that's active opposition. That's Wall Street saying we think your policy is so bad and so legally dubious that we're going to make money when it collapses. The legal challenges to Trump's tariffs are a huge part of this story. Multiple lawsuits have been filed arguing that Trump doesn't have the constitutional authority to impose these tariffs through executive order. The Constitution gives Congress the power to regulate commerce with foreign nations and to impose taxes, which is what tariffs are. Presidents have some authority to impose limited tariffs in specific circumstances under laws Congress has passed. But critics argue Trump has exceeded that authority and imposed tariffs far beyond what Congress authorized. These lawsuits are working their way through the courts, and in September 2025, a federal appeals court issued a ruling that raised serious doubts about the legality of Trump's tariff strategy. The court didn't strike down the tariffs completely, but it signaled that Trump might have overstepped his authority. Markets reacted immediately to that ruling. The Dow dropped 249 points in one day. Nearly every sector ended in the red. That's investors saying the odds just went up, that these tariffs get struck down, and we need to adjust our positions accordingly. If the Supreme Court eventually rules that Trump's tariffs were imposed illegally, the financial and political consequences would be enormous. The government would potentially have to refund tens of billions, maybe hundreds of billions of dollars in tariff collections. That's taxpayer money going out the door to refund tariffs that never should have been collected in the first place. And the Wall Street firms that bought up those refund claims would make huge profits while the government and taxpayers eat the losses. But beyond the immediate financial cost, the political damage would be catastrophic for Trump. It would be the Supreme Court telling him he violated the Constitution and exceeded his authority. It would validate every critic who said his tariff policy was illegal from the start. And it would cement his legacy as a president who crashed the stock market with an unconstitutional policy that had to be reversed at massive cost to taxpayers. The impact on everyday Americans is also significant and growing. When stock markets crash, that hurts anyone with investments or retirement accounts. But the tariffs themselves are also directly increasing consumer prices. When companies have to pay 20 or 30% tariffs on imported goods, they pass those costs on to consumers. So Americans are paying more for everything from electronics to clothing to cars. Businesses are also getting hurt. Companies that rely on imported components or materials are seeing their costs skyrocket. Some are laying off workers, others are raising prices and losing customers. And the retaliatory tariffs that other countries have imposed on American exports are hurting farmers and manufacturers who sell products overseas. So the economic pain is spreading through multiple channels at once. Stock market losses, higher consumer prices, business disruptions, and lost export markets. Trump's defense of his tariff policy has been increasingly desperate. He keeps insisting that the tariffs are working and that any economic pain is temporary and necessary. He blames the media for creating panic. He attacks Wall Street for being unpatriotic and not supporting American interests. He claims that other countries are about to cave and give him the trade deals he wants. But the evidence doesn't support any of that. Markets keep falling, economic indicators keep worsening, and other countries are showing no signs of backing down from their retaliatory measures. If anything, they're digging in because they see Trump as politically weak and vulnerable. Why would they negotiate if they think his policies might get struck down by courts or that he might lose political support and have to back off anyway? The political timing couldn't be worse for Trump. We're heading into 2026 midterm elections. Republicans need to defend their congressional seats, and they're going to have to explain to voters why their retirement accounts have lost value, why prices are higher, and why Trump's economic policies have triggered a market revolt. That's not an easy sell. Some Republicans in Congress are already starting to distance themselves from the tariff policy. They're not directly attacking Trump yet because they're afraid of his base, but they're being very careful not to defend the tariffs too enthusiastically. They're hedging their bets in case the political winds shift and voters turn against Trump's economic leadership. That lack of unified support makes Trump's position even weaker. Okay, let's break down what actually matters going forward, because this financial crisis has real consequences that are going to play out over the next several months. First, what happens if the Supreme Court rules against Trump's tariffs? This is the big question that Wall Street is betting on. If the court says Trump exceeded his constitutional authority and the tariffs are invalid, that triggers massive refund obligations. The government would have to return tens or hundreds of billions in tariff collections. Wall Street firms that bought refund claims make huge profits, and Trump suffers an enormous legal and political defeat. But the timeline matters. These cases take time to work through the courts. We might not get a Supreme Court ruling for months or even a year or more. So there's this period of uncertainty where markets have to price in the probability of different outcomes. And uncertainty is terrible for markets because investors hate not knowing what's coming. Second, how does Trump respond if markets keep falling? He's already tried reassuring investors. He's attacked critics. He's insisted his policies are working. None of that has stopped the bleeding. So what's his next move? Does he double down and insist the tariffs stay no matter what? Or does he look for ways to back down quietly and claim victory while removing some of the tariffs? The political challenge is that backing down looks weak and admits the policy failed. But continuing the policy while markets crash and the economy suffers is politically unsustainable too. Trump is caught between bad options, and every day he delays making a decision, the economic damage accumulates and the political cost increases. Third, what do other countries do in response? Right now, they've imposed retaliatory tariffs and are waiting to see if Trump blinks. But if they sense weakness, if they see Trump losing support domestically or losing in court, they might get more aggressive. They might impose additional tariffs or trade restrictions to increase pressure on Trump to back down, or they might just wait him out, knowing that his political position is weakening and time is on their side. The longer this standoff continues, the more damage it does to the global trading system and the relationships between America and its trading partners. That's hard to repair even after the immediate crisis passes. Fourth, how do everyday Americans react as the economic pain spreads? So far, the impact has been mostly felt in stock market losses and slightly higher prices. But if we start seeing significant job losses, business closures, and economic contraction, public opinion could shift dramatically. Trump supporters have been willing to give him the benefit of the doubt on a lot of things. But economic pain hits everyone. When people are losing jobs or watching their savings evaporate, political loyalty gets tested. Trump's approval ratings on the economy have already taken a hit. If the economic situation gets worse, those numbers could collapse entirely. And that would make Republicans in Congress much more likely to break with Trump publicly and push for policy changes. Fifth, what are the long-term consequences for presidential power and trade policy? If the courts rule that Trump exceeded his authority with these tariffs, that sets a precedent that limits what future presidents can do unilaterally on trade. That might be good for constitutional balance and congressional authority, but it also makes American trade policy slower and more difficult to change because everything has to go through Congress instead of the president acting quickly through executive orders. There are arguments on both sides about whether that's desirable, but regardless, this crisis is going to reshape how we think about presidential power on trade issues for decades. Now let's talk about what you should be watching for over the coming weeks and months. First, market trends. Do stocks continue falling or do they stabilize? If we see sustained declines and new lows, that increases political pressure on Trump dramatically. If markets bounce back, Trump can claim vindication and insist the critics were wrong. Second, court rulings. Any significant judicial decisions about the legality of the tariffs will move markets immediately and shift the political landscape. Third, economic data, job reports, consumer spending, business investment. All of this data will show whether the tariffs are actually hurting the real economy or if the damage is mostly confined to financial markets. Fourth, international negotiations. Are other countries showing any willingness to negotiate with Trump, or are they holding firm and waiting for him to back down? If Trump can actually get some trade concessions from other countries, he can claim his strategy is working even if it caused short-term pain. But if other countries refuse to budge, Trump's position becomes increasingly untenable. Fifth, Republican reactions in Congress. Watch how many Republicans start publicly questioning the tariff policy or pushing for modifications. If Trump loses significant support from his own party, that forces his hand politically. The human cost of this crisis is worth considering too. We're talking about real people watching their retirement savings decline, real families dealing with higher prices and economic uncertainty, real workers losing jobs as businesses struggle with higher costs. Behind all the market numbers and political analysis are millions of Americans whose financial security is being affected by these policy decisions. That's not abstract. That's people's lives being disrupted. And those people vote. They have voices, and they're going to hold politicians accountable for the economic pain they're experiencing. Here's my take on what this really means. Trump made a huge bet on tariff policy. He believed he could reshape global trade through aggressive unilateral action. He thought other countries would fold quickly and American businesses would benefit. And he assumed financial markets would support his vision once they saw the results. He was wrong on all counts. Markets crashed. Other countries retaliated. Businesses are suffering. And Wall Street is actively betting against his policies. That's a complete failure of economic strategy. And the consequences are going to be severe politically and economically. Trump now faces a choice. Admit the policy failed and back down, or continue pushing forward while the economic damage mounts. Neither option is good, Both have enormous costs, but doing nothing isn't an option either, because the crisis is accelerating. The Wall Street revolt is particularly significant because it shows that even Trump's natural allies in the business and financial community have lost faith in his economic leadership. When banks and hedge funds are betting billions that your policies will fail and be ruled illegal, that's not just criticism, that's institutional opposition with real financial backing. Trump can't dismiss that as fake news or partisan attacks. These are profit-driven institutions making calculated bets about the future, and they're betting against him. That's a devastating vote of no confidence. So what's the bottom line here? Trump's tariff policy has triggered a massive market crash, wiping out trillions in value and causing Wall Street to revolt by actively betting against his policies. The legal challenges are mounting, with courts raising serious doubts about whether Trump even had the authority to impose these tariffs. If the Supreme Court rules against him, the government faces massive refund obligations, and Trump suffers an enormous political defeat. Meanwhile, the economic pain is spreading to everyday Americans through higher prices, job losses, and declining retirement account values. Trump's political position is weakening as Republicans get nervous about defending failed economic policies heading into midterms, and the long-term damage to America's trading relationships and presidential authority on trade issues could last for decades. Watch the courts, watch the markets, and watch Trump's political support, because all three are going to determine whether this crisis gets resolved or spirals into something even worse. This is a defining moment for Trump's presidency and for American economic policy, and right now, it's not going well. It's not going well.